Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I given the part 1 of tracking the forex market together webinar during that of the European session. So we had tracked the market during that particular time frame. Now we are in the US session, 30 minutes past the start of the US session. So we will continue to track the market and try to understand how the market moves can be read in order to take trading decisions. So it's a simple market tracking technique, and if you use it, it will be a very good method and a quick method to earn consistently from the market. And in order to make it a foolproof, so we use the trading strategies also. So I'll explain to you with regard to the market reading. Now, this is the live market code page, and those who have not attended the part 1, I'll just briefly explain with regard to the live market code page. And you can also see in the archives the tracking the forex market together. Part 1 is being recorded and displayed in fxtrade.com under archives. So you can see the part 1 is given, so you can just go through that and later on understand what I try to explain to you as my method of trading in the market. So if you look into that of the live market code page, here you come across Euro is currently trading around 1.327880 and 26 pips negative net change is seen. And GBP after making a new low, USD Yen after making a new low, they just gained the level to 88.3840, still 40 pips or 38 pips negative net change is seen. And GBP has gone below that of the psychological level, 1.60, formed 1.5976, about 25 pips below that of the psychological level, and then they are firming it up now. And CHF is also in negative net change. During that of the European session, I explained to you that they are making the contrarian move in order to handle the crosses. Still, they continue to handle the crosses now. So, Euro and GBP are showing the USD gaining move, and USD Yen and USD CHF are making the USD weakening move. This is a contrarian move you come across here. All the 4 majors are showing negative net change when compared to that of the previous day close, yesterday US session close. So throughout the day, they have been holding it negative net change, but in nominal changes, they have just done it excepting GBP, just to create the sentiment. They have gone below that of 1.60, hit the stops, and they are expected to go above. Then in the case of Canadian dollar and Australian dollar, the commodity pairs, they have just made a very nominal rise in the case of USD CAD as the USD gaining move, and also in the case of Australian dollar only 16 pips. So mainly they have been focusing on handling the crosses of the 4 majors. Now we will try to see the initial lows and the highs, what they are set during that of the Japanese session around 3:30 GMT, and compare it with that of the current market level. I was telling you during the European session 1.3279 was the initial low, and now by 15 GMT they have gone above. So I told you during that of the European session that they are doing the intentional move, holding below that of the initial low for more than 2 hours. That means 2 sessions, and the start of the 3rd session, they will try to make a downward stop. And so initially it was 32.62. That was the initial low in the case of Euro. They just made another 4 pips dip. But it appears as if they made a very big drop. But they tested the patience by holding at the lower level and just made only another 4 pips downward move to 32.58 and gone about 32.79. So now they've gone above 32.79. They have not breached the new low, what they have formed during that of the late European session and the start of the US session, and also gap time. They have not breached it. And subsequently they have gone above that of the initial low 1.3279, if they sustain there, if you come across that they are sustaining it, hardly they make a small swing around that and they are sustaining it. So what do? We will straight away take the position for euro. So I will just take the positions so that I will not miss taking positions during this particular part. Later on I'll explain it. So we will take an entry in the case of euro for the US session. As I explained, that third sessions we will try to take the position, a buy position. $1.3283 or 86. Okay. Now we'll keep a stop 30 pips below. And our exit point will be initially the high what they have set for the day, 1.3325. And when the going is good, then we will try to rise the limit or the take profit level to further high and keep stop at entry, remove the stop here and keep stop at entry, and then try to make a trailing stop about 15 pips away from the market and try to see that they continue to rise, and then we can just gain the levels every 25 pips, 32, 25, 33, 25, 33, 50, 33, 75, like that we can rise it. During that time, we have to trail our stop on the lower side. If the market hits the trailing stop, we will have the minimum profit. If the market hits the highest take profit level, then we get the maximum profit. So that is how we try to trade and limit the risk and maximize the profit. It's a simple trading technique, but only thing is we read their intentions very clearly and we see that we understand their type of moves, then try to take the positions. Now in the case of GBP, and as they gain the levels above that of the initial high, initial low, we have taken the position in the case of euro. Then in the case of USDN, already they have gained the level, so it is in the middle level. What we can do is keep 10, 15 pips below that of the market level, a buy limit order, and if they fill it, fine, we will take it. That way you can do it. And in the case of GBP, they are just holding below that of the psychological level, 1.60, but still they intend to make the rise, so we can take a buy position, 1.5989, because as they have stopped cutting the new low, so we read their intentions by tracking their type of moves and then try to take the positions. We are not looking into that of the levels. We only try to take a buy near that of the low and sell near that of the high. That sort of trades we try to do it, and we limit the risk by keeping immediately the stop $1.5959, and take profit level is the high set for the day, 1.6081. So these two positions I just explained to you how we are taking it. So let me explain to you the type of understanding what we develop by following the type of moves. So here in the live market code page, I was just looking at it and I was not looking at any other tool also. Then I just showed you the initial low and the high, what they are set during that of the Japanese session around 3:30 GMT. Then during the European session, I was explaining to you that they have been holding the market below 1.3279 in the case of euro more than 2 hours. That means they want to do the intentional move, And 2 sessions and the start of the third session, they will try to make a downward move and afterwards reverse. So the players don't do hat trick. They don't continuously drop the market in all the 3 sessions. Keep it in mind. They have to reverse it. Only then they will be able to earn money. They will pretend as if the market is going to drop, but then subsequently they will gain the level, and that could be understood if you track the formation of the initial low and the high. And because that is the tool they use, they don't use any sophisticated statistical analysis or any other fundamental analysis for that matter. They only go with this and with that specific information, whether the traders are long and they're short. And based on that, they try to make the moves in the market. We only worry it by looking into various aspects. Now, in the case of GBP, they just came below that of 1.6060 during that of the European session itself and continued it. Still, they are holding it below, but stop cutting the new low. So that means they wanted to gain the levels in the case of GBP as a reversal point. And now if you look into that, Euro has made only 17 pips negative net change and GBP is making 72 pips negative net change. So the first currency to rise will be Australian dollar, which is making 16 pips negative net change. Then followed by that Euro. If you watch carefully, the negative net change will get reduced. Then finally they will rise GBP. And they already gained substantially in the case of USD-Yen, and slowly they will take it to positive net change. First USD-CHF will come to positive net change, then followed by that they will already USD CAD in positive net change, and later on they will try to gain the levels in the case of USD-Yen. Then you will find that all the majors are in positive net change by end of US session. You can just watch it and see how in a decisive manner they make the moves in the market, provided we track it properly. Otherwise, we will continue to have that uncertainty in the market. Then in the case of Yen, 88.06 was the initial low. They just dropped about 26 pips from there to 87.80. And that was the low they set during European session. And then subsequently they have not done it. And they have been hovering around 88.06 during that of the European session, creating a feel as if it is going to drop. But once they gone above and sustained there for 30 minutes, you find that they already started gaining the levels in the case of USD-Yen. Then in the case of Swiss franc, and Euro is making negative net change, and USD-CHF or Swiss is also making negative net change, which is a contrarian move, as I explained, in order to drop or make dip in the case of Euro-CHF. Now, USD-CHF 93.04 was the initial low. They have gone above, and slowly they will gain. Then it will be a surprise for everybody. When Euro is rising, how come USD-CHF is also rising? So that is what normally when Euro rises, immediately traders take sell positions in the case of USD-CHF, but the players are not going to drop here, and they just limited the drop when Euro was making more drop, and they limited the rise, and now they are consolidated and they intend to make for the rise in the case of USD-CHF. Then in the case of Canadian dollar, 98.32 is a low. They are not breached it. 98.67, they have breached and formed 98.78 and come below that of 98.67. So it's a small narrow range swing in the case of USD CAD, and so hardly we can aim for about 20-25 pips profit trade. In the case of Australian dollar also, it's just lagging behind, and the initial low was 1.0557. From there they came down to 1.0532 and started making the rise, and they are expected to breach the high and continue to rise. In the case of Australian dollar, 1.0580, they are expected to breach during the US session. So let us see whether they are doing it or not. Now you can see that Euro they are gaining, GBP they are gaining. So it is not that I'm asking them to push it, because if you know this is what they are going to do it, and every time they do the same, then you should be able to really track it instead of getting diverted with the mind. Coming to that of the second part. Okay. So in order to understand their or read their intentions, we need to note down the timings followed by that of the players. It is not that the Asian session or Japanese session, Australian session, Asian session like that. They only ask us to follow it like that. But actually these are all the timings they follow. Now, after the gap time, 14 to 14:30 GMT, European session is from 8 to 14 GMT. Then 14 to 14:30 was the gap time. They made a small swing. And 14:30 to 15 GMT, they have not breached the new low. That is first 30 minutes from the start of the session. Then the US session lasts till 21:30 GMT. Then the gap time before the next day start. So the first 30 minutes, if they don't breach the low, and as I explained during the European session, from 8 to 8:30, they made the downward move, hit the stops, and stayed below that of the initial low. Then I said that they wanted to make for the downward move because they have been holding below that of the initial low, so they continue to drop for 2 sessions and the start of the third session. So if you follow these timings, then we will be able to understand, okay, when the session starts, when the session gets closed, and how exactly they will make a downward move before making a rise. You will be able to follow that. So after forming the initial new low by about cutting the earlier low by 4 pips, they started gaining the levels. And 15 GMT, till 15 GMT, they have not made the downward stop and first 30 minutes. So near the low, we have taken the buy position. It is a basic trading strategy. Now, so we watch the market during the start of the day. Around 3:30 GMT, we note down the initial lows and the highs in 4 majors and 2 commodity pairs. This is very important. This initial low and the initial high is a reference level throughout the day. And if you could use it, then with the help of a simple live market code page, you can take your trading decisions. So your decision will be very quick and you will be able to really understand. You will not expect the candle gets closed and things like that. You will be able to fine tune and enter into the market and see that you are able to quickly keep stop at entry. So the type of moves and the session timings are important rather than the actual support and resistance levels, because they pretend as if they have come up to that of the support and reverse and then come down again. During the European session, you would have noticed that they just made a rise based on certain trigger news, and they went above that of 1.33 and went above that of 1.3318. That was the initial high, went up to 33.25, and quickly late European session they came down. So if you know that they are doing only intentional move, this rise you could have used it to take a sell position. Otherwise, wait for the drop to new drop and try to take a buy position. So understanding the type of move is very important. That is what I insist again and again. Then net change will indicate what sort of moves they intend to do it. It is actually the level from that of the previous day close. So Euro, BP, everywhere you come across, the net change gets lower, lower, lower now. So all 2 sessions they have been holding low, and third session they wanted to reverse the market. Then the next day they will form again the initial low and the high and try to make the moves depending upon the shorts and the long built up in the market. So ultimately what the players do, they try to see that the traders take long and short positions. And if the traders predominantly take long position, drop and earn money. If the traders predominantly take sell positions, they rise and induce short covering. This is what they do it. And so they focus on the earning process. We only worry about various other aspects. So if you focus on the earning process, we try to focus on the type of moves they do it, because they cannot keep the card as a closely held card. They have to expose it in the market, whatever the decisions they take. whatever the informations they gather, and subsequently whatever the move they do it in the market, they have to reveal it to us. So we read such hidden agenda of the players and try to trade along with them, because we know once we trade along with them, they cannot induce us to close the position with loss. Still, we use the trading strategy to keep stop at entry and then maximize the profit by using a trailing stop in profit making position, and also move the limit or take profit level away from that of the market. So when the market is near the low, we'll try to take a buy position. When the market is near the high, we'll try to take a sell position during the first 30 minutes of the start of the market. Then afterwards, if the market is in the middle level, simply we relax, understand that they are handling the crosses. So when they are handling the crosses, and we have to wait patiently. So what they have done, quickly I have taken the position, and I am just trying to keep stop at entry once it makes about 20-25 pips profit, and then till such time 30 pips stop will be working. If the hedging facility is available, we can use the hedging order. Then subsequently, once they go up and make about 25 pips profit, keep stop at entry and remove the other stop what we have kept lower, so that we don't incur any loss. So the first focus of a trader is avoid making loss. Then think of making profit. If you think of making profit and in the process just get distracted and see that the position makes loss, you are not a professional trader. So if you want to really become a professional trader, a trader has to have the contingency plan and see that he does not make loss. Then subsequently try to maximize the profit. A normal, experienced or a new trader, newbie, he will try to take a buy position or a sell position, wait. When the position is making huge loss, and once the position starts making profit, quickly grab it about 2 to 10 pips, fine. You'll say, thank God I escaped without making loss. But that is not trading. In trading, what you have to do, minimize the risk and maximize the profit. That is what, in other words, it's called as the risk-reward ratio. Take a risk of only one part and the reward should be 3 parts. But in the process, you should not take a risk of 100 pips aiming a reward of 300 pips. Then it becomes difficult to manage, because once the market hits your stop, like if they drop like today and hit your stop in the case of GBB, how they had dropped it from that of the high, hit your stop, even though you find that there is a potential for GBB to go up, but you don't have a position. So in the market, what you have to do is, you have to wait for the quick moves in the market. During early and the late sessions, you can take positions in the case of majors, and during the mid session, you have to simply relax, because mid sessions they handle the crosses. So identifying the type of moves, I explained it in the previous part also, and in case if somebody wants to know it, so there are 4 different type of moves they do it basically. Besides, they have the swings in between, and the first one is stop and. So during session start and session close time, they make the above that of the initial high or below that of the initial low, they make a breaching of 15 to 25 pips and reverse within 30 minutes. False move is the one, they come from that of the high all the way to low. Without breaching the low, they come up and breach the high and stay above. And that is called false move. They pretend as if it is going to drop and then subsequently gain the level and go above that of the high and continue to rise. So when they pretend a downward move, immediately the traders holding long will liquidate and traders tend to sell after the drop. That is a normal scenario we come across, because they think that it has breached the support, it has to drop further down, they take the sell position. So they ask or induce others to follow such breaching of the supports And once the traders commit more sell positions, they gain the level simply and hold. Then the trader has got no other option than to sell one more so that out of the average they can come out. Then they gain further and then sell one more so that below the average we can do the cover of during a small pullback. And later on they make a big rise. So all the 3-4 positions will be making loss. That will give the margin call. So this is how they try to induce the traders to commit wrongly. So we should not become victim again and again to that of the players. That means normally there is a saying that only fools will repeat the mistakes. Now, then extended move, which is a move which happens more than 30 minutes and up to 2 hours. So this move, they try to breach quickly the low and form the new low. Or they just breach the high and form the new high. And afterwards, they don't cut the new high for 2 hours and reverse it. And that is extended move. Extended move will be always a quick move. It sustains only for about 2 hours. Then the intentional move, they do it for 2 sessions and the start of the 3rd session. Today you would have witnessed it. I was explaining it on the downside, how they had done the downward move for 2 sessions and the start of the US session and reverse the market. This is what they do it as an intentional move. Their intention is to drop the market and buy. They are not sellers, they are buying. So they do the circular trades and hold at lower level. So automatically the long holders think that everybody is telling the market is bearish, the market is under the control of bears and things like that. So try to liquidate all the long, better go with that of the selling or go with that of the herd of traders. So better liquidate the long and take sell positions and try to recover the loss. Then you find the market reverse upward and go, and we continue to lose if you follow the herd. And there is a saying, go with that of the trend. You just see whether this is a small swing on the upside and downside is a trend or the long-term trend we have to follow. That you have to take a decision. Then during that of the mid sessions, they make the swings. So between the low and the high, without breaching the low or the high, they make the swings in order to handle the crosses. So these are all the type of moves you come across. And yet another type of move which is referred as the extended stoppant. So extended move is for 2 hours for about 30-40 pips or sometimes 60 pips. But extended stoppant is for about 150 pips. And you know that during the closing of the year, they made the drop to euro in the case of 1.3150 to 1.30 level, and that was an extended downward stoppant. And on the 2nd of January, they just straight away opened it about 150 pips upward. That is an extended stoppant on the upside. Then again from there they made the drop, then recovered to 1.34, again made drop, now they are recovering it. So this is how they do the whipsaw moves and try to build the positions, and later on they reveal their intentions. By the time they reveal the intentions, we won't be having any positions to do position trade. That's what happens to most of the traders. Even though they know very well this could be the bottom, try to take a buy out of fear. What they do is exit with 10 to 15 pips profit. And later on you find that they just shift the market upward and take about 200-300 pips. And they miss great opportunities. You know, when USDN was trading around 80, 82, I am very sure nobody would have taken a position, or if at all they would have taken a position, they would have just exited with 10 to 15 pips profit, because the spread between the low and the high was so narrow during those days. And suddenly they started gaining the levels. I was telling you that they wanted to make one-sided rise in the case of USDN. And if you would have taken a buy position and kept stop at entry and just continued the position trade, you would have seen how much of profit you could have made it. So rather than looking for 10 to 15 pips profit to build up, if you wait for a good opportunity during second and third week of the month, that they do the trending move, weak beginning false move, and either way stop and then subsequently gain the levels. If you understand the type of moves during the week, then you will find it very easy to take the position and do position trade. Now the trading strategy is, whatever the level we enter into that of the market, we try to keep 30 pips stop. And people might be asking why you are not considering the pivot point or the support and the resistance, simply keep 30 pips. Because I can only afford to lose 30 pips at a given time. It is very simple. It is not that the support is about 70 pips or 80 pips below that, so I will try to keep the stop below. No. In case if they hit my stop, I cannot withstand the loss. As a small trader, you should have the commitment on that. And why 30 pips? Because they make the swings for about 15 to 23 pips during stop hunt. If I keep 30 pips, it is very unlikely that they will hit my stop. So that is how the 30 pips is being derived. It is very simple. No sophisticated analysis. Because every time if you see the spread, they do it for 15 to 23 pips. So 7 pips and 30 pips below the market if you are taking a buy, 70 pips above that of the market if you are taking a sell, we'll treat the stop loss. And once a position makes about 25 pips profit, we keep stop at entry and remove the stop. So the damage is prevented, first of all. We don't make any loss. In case if they hit my stop at even, then I will not make any loss. So then I get rid of the market fear. Once I know that I am not going to make any loss. So without a stop, if you hold the position, you become nervous. No, what? Euro is not going above 1.33. Suddenly they may drop. So what do? I am not keeping a stop. It is better to close when I see about 5-10 pips profit. That is how the mind works. Then we close the position later on, rip, and that they simply make slow gain pip by pip on the higher side and continue to gain above that of the high. Then you say that, no, I only aim for 30 pips because it is something like that, as if I am not fooled. So we should not be fooled again and again by that of the market. And if you are really an experienced person in the trading, then you should be able to make use of all such experiences and how they are just made such false moves and trapped us. So if you could understand that and follow the type of moves, you will find that they continue to do the same. And then why not I track it? It is very easy to track, in fact. Then the entry is near that of the low for the buy position. Entry for sell is near that of the high. When the market is in between, we don't enter. It is very simple. And when they breach the high and stay above that high for more than 30 minutes, we can do a technical trade of buy above that of the high. Many of the traders do go in for the breakout trade. My humble suggestion will be you can go for a breakout trade based on the technicals. In the technical also, you will come across the initial low and the highs will be considered. And then once they go above that of the high, wait for 30 minutes. And if they sustain above that of the initial high for more than 30 minutes, you take a buy because market is not going to run away. And definitely they will hold there so that those who have taken the buy position will liquidate and book small profit. Then only they will try to rise. Why they rise after that? So that they will have the least selling pressure from that of the long holders. So it is a logic. So when they hold, wait for 30 minutes. If they sustain above that, you try to take a buy. Above that of the initial high, and you will be able to easily book profit. And below that of the initial low, you will be able to easily book profit. But that profit will be on the extended move. Keep that in mind. About 50 to 60 pips maximum you will be able to earn. Then the exit. So when I have taken a buy near that of the low or buy above that of the initial high, then my exit will be the 45 pips to start with regard to the technical trade. And if I taken near that of the low, then my initial target will be the high. And if the going is good, I will move 25 pips away each time, the limit, take profit level, and use the trailing stop of 15 pips so that I will try to maximize the profit. Let them go, 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 and try to maximize the profit because I'm not taking any risk there. So it is not that there is going to be a strong resistance. At that resistance level, they will reverse, so I'll exit. It can go closer to the resistance level and come back. Or simply it can breach the resistance and go above. Then you call it as resistance 1, and it may go up to resistance 2, may go up to resistance 3. Then it breaches that. Then we will say, okay, the resistance turns support. Fine. But in what way you have taken advantage in your trading is more important. I can give comments about the market endlessly on a daily basis. But in what way I took the advantage out of such studies in my trading is most important thing. Now coming to that of the position. Currently I just explained to you. So 32.86 I took a buy, which is still making about 2 pips profit. So let them gain a little more, about 20 or 25 pips above. Then I'll keep stop at entry. And my buy in the case of GBP is making a small loss of about 2 to 3 pips. And I got the stop to limit the risk. And once the position start making the profit, I'll keep stop at entry. Then USDN, so they are holding around 88.43.45. It is a middle level, about 5-10 pips. Below that we can keep a buy order, and if they fill it, fine. Otherwise, near that of the low or near that of the initial low, 88.06, we could have taken a buy. But I started the webinar only by 15 GMT, so I missed that opportunity. Doesn't matter, but if you understand the concept, it is not that I making profit is important. You should be able to understand the concept so that you will be able to continuously earn money from that other market without any stress. Because I find many of the traders contacting me and telling that I followed various techniques and still I made huge loss and you have to help me. So it is very, very unfortunate to see that the traders who lose money, they make only a private disclosure. And the traders who make good profit, they make an open disclosure. Because that is a human tendency. But ultimately what is more important is, have I understood the market or not? If I have not understood the market, how can I go for trading? So understand the market. First of all, it is a man-made market. So in a man-made market, it is not God-made market, it is a man-made market. In the man-made market, you find several traders participate. But we don't have any ability to buy euro to make even 1 or 2 pips rise in the market. In the trading platform, you just place 100 lots, 200 lots, 500 lots in a particular level and see whether the market is going up. No. Only in the bank terminal they can do it. And there they can keep a higher level buy and push the market upward, lower level sell and push the market downward. Okay, it is a man-made market. It is a manipulated market. In a manipulated market, we need to understand the secret of manipulation. Rather than simply telling the market is manipulated, it's a foul game and things like that. If you understand the secret, then you will be able to unwind the secret and try to trade and earn money from them. So let me try to, there are about 5-6 minutes left. I'll try to answer to the questions which are asked here. Could you kindly suggest the entry point for today? I just given the entry point, but my sincere advice will be learn the technique and follow it sincerely, because I have given the tracking the forex market together webinars and also the my trading system webinars which are recorded and displayed in fxtrade.net free of cost. So I'm not expecting any reward, but I want you to learn it as an additional input. Whatever you learn is not going to become waste, and you can use it as an additional input, and that can help you in trimming your psychology, trimming your fear factor, so that you will be able to take your own decisions in trading. Once you take your decision and try to stand with that, you'll be able to really see that you fine-tune your entries by yourself, rather than asking somebody, what is the entry, so that I can also enter. Then it becomes a herd mentality. Just because somebody has said that you enter at this level, you enter it. In the event if the trade goes wrong, the person who has given the suggestion will say, no, those who are following money management, only then they can follow my calls, and they have to strictly use the stop and things like that. And ultimately, it can only act as a disclaimer, but you have not followed it, so you have to face the consequences of incurring a heavy loss. So instead, best thing is, you try to understand how the entry has to be decided. Whatever the method you follow, then you stand with that. You will be able to really make money and fine-tune your trading strategy, and you will be able to really earn money from that of the market. See, I used to tell my students and others, if at all you are hungry, nobody in this world can eat on your behalf excepting yourself. So you have to learn that if you want to sustain in the market, and if you want to really trade and make it as a career for you. Okay, now careers. When you refer to high lows, you mean daily? Refer to initial high and the initial low, which are available in the live market code page. If you note down around 3:30 GMT, that will be the initial low and the high in 4 majors and 2 commodity pairs. That is used as a reference level by that of the players to go below that of the initial low and come above that of the initial high, and then they make either way swings that way to hit the stops. Okay. What is your average pip trade? What do you usually target? Okay, I aim for 45 pips to start with. When the going is good, then I maximize to 75 pips. And in the event if they make spikes and things like that, I make 150 pips, because I always enter closer to low the buy. I don't do the contrarian trade of sell and buy, because if you go in for a sell and buy, see, today's initial low was 1.3279. Okay, they breached the low and stayed below. I could have taken a sell position. And after taking a sell position, I hardly get about 15 pips. For the sake of 15 pips, if I focus, if they suddenly reverse, and this 3279 will be making loss, unless and otherwise I keep stop at entry. So I don't aim for the small profit. I know very well they will be making a downward stop. I was telling you during the European session, but I am not given any trading suggestion there for the simple reason that the players cannot do short selling. If you know probably some of the people, then you will be able to understand. They have to accumulate the buy position and book profit. So they are in the process of accumulating the buy positions for the new year, and they intend to make a very big rise. Later on, we will be able to understand that. So I aim for 45, 75 and 150. When the going is good, above 75, definitely it will reach 150. And you would have noticed last week how euro was gaining. So if you simply wait, they will gain about 150 pips net change level, and you will be able to really book profit. That is how, if you maximize the profit one single trade, then you will not become addicted to trading, because you will have a sizable profit earned, and you tend to relax and wait for another good opportunity. Okay. And the market hours, we need to note down the initial low and the high calls around 3:30 GMT. Okay, wine brown. We see a lot of contrarian moves when looking at the stock page. What would a non-contrarian move look like? A non-contrarian move is either USD gaining move or USD weakening move. Simple. See, they have gained the level now in euro. And now they will be breaching that 1.3325 slowly. Afterwards, you will come across quick jumps happening in the market. Now you can keep stop at entry. Don't become greedy and wait. Instead, keep stop at entry so that I don't incur any loss. Let them take the market wherever they want. Then I'll try to maximize it. And I only look for 30 pips loss, which is bearable for me to start with. Whether I buy it at 1.33 or buy it at 1.31 or 1.28 doesn't matter for me. I only take a chance for 30 pips at any given time. And once the position makes profit, I just eliminate the risk and keep stop at entry. If you follow this particular method, you will see that you don't incur loss. That is a great achievement as a trader. Then subsequently maximize the profit. That is the only way of consistently earning money from that other market. Okay. Other than contrarian move is USD gaining. All the currencies are making USD gaining move or USD weakening move. So the numerators, when they show the positive net change, all the numerators, Euro, GBP and Australian dollar show positive net change, and USDN and USD CHF. Then Canadian dollar show negative net change, that is USD weakening move. The opposite is the USD gaining move. The denominator currency is showing positive net change and the numerator. So numerator in the sense the currency name comes in the numerator of the ratio. Euro, USD, GBP, USD, Australian dollar, USD. They are numerator currencies. These currencies come under denominator. That is how they make the moves. We need to understand that. Why certain currencies are in denominator, why certain currencies are numerator, we need to know the secret. Then you'll laugh at them. See, as long as it is human invention, another human should be able to really read it. If it is God's creation, it is extremely difficult. But people tend to say that they have understood God's creation, but they fail to understand human creations. Do you ever look at your chart? I stopped looking at the chart for so many years, more than 15 years. I find that following the chart is good if the market is not manipulated. If the market is manipulated, what is a big idea of following the chart? And they misguide us. And we get distracted. It's very simple logic. I am a statistics professor, but I found that following it, certain times it works, certain other times it does not work. And again I am back to square one, taking chances. There is no 100% efficiency in that. Because you may say that my chart reading is 99.9% accurate. Fine, good. Then in the event, if the chart goes against us at 1.01% or even 0.5%, if that happens to be an extended stop end, all the small money what I earned will be lost. So I'll be back to square one. I can tell in terms of percentage, but ultimately what is the quantum I earned is more important. So as a common trader, you need to understand the differences. Then choke here. The upward trending move in Euro and GBP in the week and next week. Could you please show us the weekly forecast if you don't hold Asian analysis next week? The initial low and the high, I am not prepared. The initial low and the high for the rest of the thing. Only Monday and Wednesday. Today I noted down. So I'll be otherwise busy with certain other work, so I will not be able to present the Asian session live market analysis next week also. Kindly bear with me, my apologies for that. But It's very simple. 330, note down from that of the live market code page. So I don't think there will be any difficulty in that. But the market is going to rise in coming days till first, second week of February. That's what my forecast algorithm says. In between, they will be making the downward stop as part of the game to accumulate buy positions. When all turn long, they have to necessarily see that they lose the positions before making further rise. They are in the money making process. We are only looking for level straight. So initial lows and the highs are to be noted down around 330. There is no change. No Europeans, every session will not come across initial low and the high. That is how the players follow. So we have to follow their footsteps. The players cannot do short selling. They must do buy and profit. So there is a long story for that. And you know the banks are not permitted to go in for a short selling. The institutions are not permitted. And you need to know certain other rules. When you use the banks, then we have to follow certain rules of the banks also. What is a PIP unit value you take? Okay. PIP unit value, it depends upon the currency pair. And I think you are talking in terms of the micro lot, mini lot, standard lots and things like that. It is irrespective of the lot size. It depends upon the equity. If the equity is less than $30,000, I recommend the traders to take only one mini lot and try to trade at a time so that you don't get the market fear. Do you see USDN rise above 90? Yes, sir. It will take. Definitely it is going to rise and very soon you will come across above 100. When the intentional move finished, the intentional move gets over by the start of the third session. On the downward move is over, now they started gaining it. Then they will make the swings again. They will make an extended move on the downside again tomorrow during start of the Japanese session and start making the intentional move on the upside. So extended move will be a quick move and intentional move will be slow move. So slowly they will gain the levels. Tomorrow you will be able to see that from that of the Japanese session. So from today's move, I derived tomorrow's move. You don't require any sophisticated analysis. They alternate the intentional move with that of the extended move. Just follow it. You will be able to predict on your own. Okay. Then wine, incredible. Okay. I would feel blind without chart. No, because you become addicted to chart reading. So you find it without chart, you don't really find the path. No, and we come across the GPS and the navigation tools now. And in US, if we ask anybody without a navigation tool, will you be able to reach a destination? They will say, no, I need GPS. Without that, I will not be able to. But just imagine about 50 years back, 100 years back, and they did not have any of a sophisticated technique for navigations. And still they have been traveling. And leave alone human beings, the migratory birds. And they have the navigational tool and they use the sun's position as the compass and try to use it to go from Arctic to Antarctic. There is a bird called Arctic tern, which makes the move without using any of the sophisticated the navigational equipments. So all these gadgets which will make us avoid thinking, going for logistics, and immediately whatever you find in the gadget becomes true for us. In the event if the gadgets fail, we fail to recognize it. It is a very unfortunate situation when we become mission dependent. Then JP, how do we say Euro USD was intentional move? Normally this move for 2 sessions. Early European session was rising. No, early European session for the news they made a small rise and 30 minutes they just made the drops. Uh, do you look at statistics which show which position the players are holding? Do the players have stats of what the others? The players know what others have got the positions. I cannot explain beyond that because it's their secret. So in an open forum, I cannot disclose it. But at the same time, they make the moves against that of the majority of the traders. They cannot make every trader to lose money. Anybody who trades along with them cannot lose. Anybody who follows the herd of other traders will lose in the market, invariably. So they give a small profit and take away big loss or big money from us. So they will make the fundamentals and the technicals appear working and suddenly reverse the market using some other trigger. Every time they do this. Yeah. Okay. So it's time for us. So now we can understand the positions are trying to make profit. We can keep stop at entry, remove the stop, and then try to maximize the profit. So you can just follow this simple technique if you want and just do it in a demo trading platform and see that you are able to control your emotions and follow it sincerely and able to read the market effectively. Then you will find you become the master of trading. So I take this opportunity to thank FX Street and also you people for patiently listening and giving that opportunity to present before you the webinar. And my contact details are given here. My website address is given. And my email ID is dr@i-noindices.com. My MSN and Yahoo Messenger chat IDs are given. My phone numbers are given. I'm not doing any promotion here. If you've got any doubt, you can ask me. That will be free of cost. Thank you one and all. See you during the next webinar.